Good morning. It represents a critical juncture in the technology markets. It is Tuesday, February 10th, 2026. This is the DX Today AI Daily Brief. Investors are navigating a sharp divergence today. While the software sector faces its steepest drawdown in decades due to fears of AI displacement, the infrastructure giants are doubling down with trillion-dollar investments. From massive bond sales to new silicon breakthroughs, the race to build the autonomous future is accelerating, even as the market debates who will profit from it.
The software sector is reeling from a historic sell-off. According to J.P. Morgan Chase, the industry has experienced a 34% decline over the last 12 months, wiping out approximately $2 trillion in market capitalization. This represents the largest non-recessionary drawdown in over 30 years. The decline is driven by investor fears that large language models will replace rather than enhance traditional enterprise software. However, J.P. Morgan analysts suggest the market has overcorrected. They argue that multi-year contracts and high switching costs provide a buffer for these companies, and the worst-case disruption scenarios currently priced in are unlikely to materialize in the immediate future.
The broader markets are showing significant resilience. The S&P 500 has rallied nearly 0.5%, pushing back toward all-time highs and effectively reversing the momentum from last week's AI-induced sell-off. While the software sector struggles, the majority of S&P companies are beating consensus earnings estimates, proving that corporate profitability remains robust. In global trading, the Nikkei 225 surged over 2%, while European indices remain mixed. The data suggests that investors are beginning to distinguish between specific AI disruption risks and the general health of the economy.
Alphabet is tapping the debt markets to fuel its artificial intelligence ambitions. The company has launched a $15 billion bond sale across 7 parts, explicitly tied to the accelerating costs of its AI infrastructure build-out. This aggressive financing move underscores the capital-intensive nature of the current tech landscape. As the race for generative AI supremacy tightens, hyperscalers like Alphabet are leveraging their balance sheets to ensure they have the liquidity required to sustain massive hardware and data center expansions without slowing down.
The scale of investment being planned is unprecedented. Wells Fargo reports that capital expenditure guidance for hyperscalers in 2026 has jumped 24% year over year. That represents a single-year outlay of $660 billion. Looking further out, the bank projects a total of $1.3 trillion will be spent on AI facilities through 2027. Notably, these tech giants have consistently invested 50 percentage points above consensus expectations over the last year, signaling unwavering confidence in the commercial viability of their infrastructure.
Bank of America is forecasting that hyperscalers will issue approximately $140 billion in direct debt this year alone. Analysts caution that risks are tilted to the upside, meaning borrowing could exceed even these high estimates. This debt is the fuel for the AI engine, flowing downstream to real estate developers, data center operators, and energy providers. It highlights the massive financial engineering required to sustain the current pace of innovation, as companies race to secure the physical assets necessary for the next decade of compute.
At Cisco Live in Amsterdam, the networking giant unveiled the Silicon One G300 switch, designed specifically for gigawatt-scale AI clusters. The new silicon promises a 28% improvement in job completion times and significantly higher network utilization. Alongside the hardware, Cisco introduced Agentic Ops, a suite of innovations covering networking, security, and observability for agentic AI workloads. As AI systems become more autonomous, the underlying network infrastructure must evolve to handle the complexity, and Cisco is positioning itself as the essential plumbing for this new agentic era.
The federal government is stepping in to address the resource intensity of the AI boom. Washington is currently negotiating a voluntary pact with major tech companies to curb the environmental impact of data centers. The discussions focus on mitigating the strain on power grids and water supplies caused by rapid infrastructure expansion. Under the proposed terms, tech giants could be asked to absorb more of the costs associated with grid upgrades and resource management. This marks a shift toward regulatory pressure, forcing hyperscale physical externalities of their digital growth.
A new poll from ISACA indicates that 59% of IT and cybersecurity professionals anticipate a rise in AI-driven threats this year. The industry views 2026 as a turning point where AI transitions from assistive tools to agentic AI, systems capable of autonomous decision-making and task execution. This shift creates a critical governance challenge. When AI operates independently, errors or security breaches can cascade exponentially before human intervention is possible. The data suggests an urgent market demand for new frameworks to govern these autonomous agents.
The Spring Framework, a cornerstone of enterprise Java development, is moving quickly to secure the next generation of applications. The Spring AI community has launched the MCP Security Project, an experimental initiative designed to secure Model Context Protocol endpoints. As enterprises deploy more AI agents that communicate directly with one another, securing the protocols they use to exchange context is becoming a top priority. This tooling represents the vital security layer for the emerging agentic web, ensuring that autonomous communications remain tamper-proof.
Artificial intelligence is fundamentally reshaping governance, risk, and compliance, or GRC. Enterprises are now integrating AI directly into compliance workflows, moving beyond simple automation to AI-assisted research and decision support. This evolution is driven by the need to manage complex issues like data sovereignty and the governance of AI systems themselves. As regulations tighten globally, companies are finding that the only way to maintain compliance at scale is to leverage the very technology they are trying to regulate.
The legal profession is formalizing AI literacy. IP Watchdog has launched a specialized workshop titled How to Prompt AI, targeted specifically at patent professionals. The course, which offers continuing legal education credits, focuses on prompt engineering for patent preparation and prosecution. This development signals that communicating effectively with AI models is no longer just a tech skill. It is becoming a required competency for high-level knowledge work, essential for efficiency in complex legal drafting.
Bitcoin is trading at $69,200 this morning, mirroring the recovery seen in the broader equity markets. After the volatility associated with the tech sector sell-off last week, the cryptocurrency market appears to be stabilizing. Traders are viewing this as a sign that risk appetite is returning. As is often the case, digital assets are serving as a real-time barometer for investor sentiment regarding the longevity of the current tech cycle. That is the briefing for today. As the industry balances the software correction against the infrastructure boom, we will continue to track the signal. For DX Today, stay curious.